Good day, Junior Tickies. I'm Mrs. Brimacombe. We're going to look now at Chapter 2, Activity 4. The following information was extracted from the accounting records of Buffalo Kitchenware Supplies. The business sells for cash and on credit and uses a fixed markup percentage on cost. 4.1. Record the transactions in the CRJ, the CPJ, and the Debtors Journal. Question number 2. Post to the Debtors Ledger. The third question. Post to the following accounts in the General Ledger, and 4.4 show the effect on the accounting equation. So when we start with this activity, our step number 1 is to calculate what is our markup percentage. To calculate the markup percentage, we have to take our sales minus cost of sales equals gross profit divided by cost of sales times 100 equals 50%. So this is the fixed markup percentage which is going to be used. Now when we approach this question, a reminder, we start with the opening balances in the General Ledger and the Debtors Ledger on the 1st of June 2024. Step number 2, post the transactions to the relevant journal. And if a debtor is involved, you have to take it to their individual ledger account on the same day, what we call the debtor's ledger. At the end of each day, you have to calculate the new balance. At the end of the month, once you are done posting to the relevant debtor's ledger and once you've posted to the journals or taken the transactions to the journals, you have to close off the journals and post it to the General Ledger. So when we're going to approach this activity now, I'm going to first start with the Debtors Journal, and then I'm going to move on to the Cash Receipts Journal and the Cash Payment Journal. This makes it much easier if you get a type of transaction where they told you that the debtor settled his account. Then I need to consider, but did he purchase on credit? What was his opening balance? Was there any payment made before that date? So we need to look at all the transactions then. So we're first going to start with the Debtors Journal. Day 5, sold the following goods on credit to M. Brits, issued invoice B1. The only source document that will appear in a Debtors Journal is duplicate invoice. So you can only write it once, and then we write the number B1. This transaction happened on day 5. Who purchased from us? M. Brits. For how much? 2,100 plus 5,250. So the total sales amount is 7,350. Now we need to use the markup percentage, which was 50%, to calculate the cost. To calculate the cost, we have to take the selling price times 100 divided by 150. So that equals 4,900. On day 16, supplied goods on credit to our Olifant for 2,520 after 4% trade discount was given. So we start off by completing the source document, number B2. This must be in numeric order, so that I don't need to tell you the source document number. You should know that it's in numeric order, so the next number would be B2. Who purchased from us? At Olifant, and the selling price was 2,520. But now this is the challenging part, how to calculate the cost. The cost price is always calculated on the original selling price. That's why we need to first calculate the original selling price by taking 2,520 times 100 divided by 96. And then we can say times 100 divided by 150 to get the cost. This must be taken to the individual's account, which is the Debtors Ledger number 4. Day 22, sold goods on credit to Gia Haasbroek for $22,050 before 6% trade discount was given. We start by calculating, but what is the selling price then? Because that was the selling price, $22,050 before 6% trade discount. This means that the selling price after the trade discount is $20,727. You can work out 6% and then subtract it, or you can just times it by 94%. To calculate the cost, you have to use the original selling price times 100 divided by 150. The source document, number B3, on day 22, name of debtor, Gia Haasbroek, the selling price after the discount, $20,727, and the cost, $14,700. This must be posted to his individual account. Day 26, delivered goods on credit to F. Lotus, the cost $18,400. F. Lotus was given 10% discount on items purchased. So this is now important to remember that they've provided you with the cost. So if I look at the easy marks to get, the easy part, the source document is B4, day 26, F. Lotus purchased from us, and the cost was $18,400, which goes into cost of sales. To calculate the selling price now, we have to first say $18,400 times 150 divided by 100, and then 10% discount is given, which means that this debtor owes us only 90% of that total. So we times it then by 90. And that equals the selling price after the trade discount of 10%. And this must be taken to the individual's account. Day 29, credit sales of goods to M. Brits. So we start with M. Brits, source document B5, on day 29. Selling price goes into sales, $3,900, and the cost, $2,600. On the same day, source document number B6, Olifant purchase from us, the selling price, $6,429, and the cost, $4,286. This must be posted to his individual account. Then on the same day, we don't need to write the date, the source document B7, who purchased from us, J. Now. This must be taken to his individual account, the debtor's ledger number 5, the selling price $1,470, and the cost is $980. And once we're done with this, we can draw a line so that we can total sales and cost of sales. Completing the cash receipts journal, day 2. Received an EFT for $20,000 from a debtor, M. Brits, to settle part of his outstanding balance on 1 June 2024. Issued receipt. So be careful with this. They said received an EFT, which means it would have been bank statement. But now they specifically said issued a receipt. That's why the source document is duplicate receipt. From who did we receive the money? From M. Brits. How much? $20,000. It goes directly to bank. Why? Because of debtor's control. This is a debtor, so we have to post it to his personal account. On the same day, cash sales of merchandise as per cash invoice 1 to 10, $21,915. Source document, duplicate invoice. Make sure that you write the number 1 to 10. Details, sales, analysis of receipts, $21,915. Bank, $21,915. And then sales, this is the reason why we've received the money, $21,915. And to calculate the cost, take the selling price times 100 divided by 150. Day 8, received 7,400 from Gehaasbroek for part payment of his account. Issued receipt. Source document, duplicate receipt number 24. Day 8, from who did we receive the money? Gehaasbroek. How much? 7,400. For what reason? This is a debtor. That's why it goes under debtor's control. The next transaction happened on day 11. So this means that we draw a line. How much do we deposit in our bank account? 7,400. Day 11, cash sales of merchandise as per cash invoice 11 to 20, 24,000. Source document, duplicate cash invoice 11 to 20. On day 11, details sales, analysis of receipts 24,000, sales 24,000, and to calculate the cost, take the selling price times 100 divided by 150. The cost will always appear in cost of sales. On the same day, received an EFT from a debtor at Olifant for 10,400. Source document, bank statement. From who did we receive the money? At Olifant. How much? It goes directly to bank, 10,400. For what reason? This is a debtor, so it goes to debtor's control. Now we can draw a line. How much did we deposit in our bank account? 24,000. Day 16. Received a direct transfer from F. Lotus in full settlement of his account to date. The opening balance from the debtors list for F. Lotus is 29,720. Now, remember that we've completed the debtors journal first. So now it's easy for us to have a look and see. But F. Lotus had a balance in the beginning, and now, before the 16th, there was no purchase from F. Lotus. There were no payment from F. Lotus before the 16th, which means that the amount which he settled was the amount on the first day of the month, which is 29,720. This means that we can write source document, bank statement, F. Lotus, how much did we receive? 29,720. And what is F. Lotus to us? A debtor. That's why it goes under debtor's control. Day 22, cash sales of goods as per cash invoices 21 to 30. The cost was 15,740. Be careful, here they provided you with the cost. Source document, duplicate invoice number 21 to 30. On day 22, my details, sales. So now I'm going to start with the cost was 15,740. And to calculate the selling price, take the cost times 150 divided by 100. And that goes to sales and analysis of receipts. There were no other transactions on day 22, so we draw a line. And how much did we deposit? 23,610. Day 30. The bank statement reflected the following money received from the following debtors. Or reflected the money received from the following debtors. M. Britt settled 80% of his outstanding balance to date, and Haasbroek paid 29,429 in part payment of his account. And then this is another reason why I completed the debtors journal first, because now it makes it so much easier to see, but what is the balance? And now what will make it even more easier if you complete the debtors ledger at the same time. While completing a transaction, take it to the individual's account. But take note of the different ways in which we can solve this. The balance in the beginning is 36,500. So now if we go and we have a look at the debtors journal, you would notice that on day 5, Brits purchased for 7,350, so we need to add it. He purchased on the 29th for 3,900, so we need to add it. And if we go and we look at the cash receipts journals, you would see right in the beginning a payment was made of 20,000, which means we need to subtract it. So again, if we take the 36,500 minus 20,000 plus 7,350 plus 3,900, it means that the balance is 27,750, and 80% of that will be paid, which means that we will receive 22,200 from this debtor. From Haasbroek, it is straightforward. They told you he paid an amount in part payment of his account, 29,429. Once we've completed the cash receipts journal, taking all the transactions to where it's supposed to go, we can total, and we start with bank, sales, cost of sales, and debtors control. There is nothing under sundry accounts. Completing the cash payment journal. On day 4, bought merchandise from AX wholesalers, 39,120, and paid by EFT. The only source documents that will appear in a CPJ is an EFT or if a direct payment was made, bank statement. So this is how you would identify what goes into the cash payment journal, and it said to you bought merchandise. So the source document EFT number 10, day 4, from who did we purchase? AX wholesalers. How much? 39,120, and merchandise is shown as trading stock. Day 8, bought trading stock from Fox wholesalers, 15,000, and paid by EFT. This is subject to an 8% discount. A reminder that discount can be given to our customers and discount can be received. So now the source document is EFT. The amount 15,000 times 8% means that we're going to get 1,200 trade discount. So what is the amount after the discount that we need to pay? 13,800. Or you could have just said 15,000 times 92% of the amount. As I've mentioned, the source document, EFT number 11, on day 8, from who did we purchase? Fox wholesalers. How much? 13,800. And what did we purchase? Trading stock. On day 26, issued an EFT to Blitz traders. Merchandise was purchased for 27,100, subject to a 5% trade discount. So take note of the following. Number 1, it said issued an EFT. That means a payment is made. So we start with the EFT number. It's a numeric order, number 12. On which day did the transaction happen? Day 26. From who did we purchase? Blitz traders. And now we need to calculate. Can you see the difference? This is subject to a 5% trade discount, which means that we're going to take 27,100 times 95% of that amount. And that is the amount that we have paid. Once we are done with all the transactions that goes into the CPJ, we are going to total. And there was only 2 money columns involved here, and that is bank and trading stock. Completing the debtors ledger now. We've done now all the journals, so we're approaching it a little bit different. So again, a reminder, when we're completing the transaction, you have to take the transaction immediately to the individual's account. But we first start with the balance brought down, or you can write account rendered on the 1st of June 2024, 36,500. This must be in date order, so you cannot just start with the CRJ, for example, and then go on to the debtors journal. You have to look at the dates, and the first transaction was on day 2, receipt number 23 from the cash receipts journal, credit 20,000, so my new balance is 16,500. Remember that debtors ledger is regarded as a current asset, which means debit plus, credit minus. Then on day 5, code number 1 is the transaction number. Invoice number B1 was issued as evidence or proof. The total amount 7,350 and the new balance 23,850. Then on day 29, invoice number B5, amount 3,900 from the debtors journal. Calculate the new balance by adding 3,900 to 23,850. And then the last transaction, day 30, source document, bank statement from the cash receipts journal. And the total amount, this is what I referred to earlier. What is the balance? Times 80%. That is the amount which was paid, 22,200. So what is the balance left over? 5,550. For debtor number 2, F Lotus, we start with the balance on the 1st of June 2024, account rendered 29,720. On day 16, bank statement from the cash receipts journal number 6, 29,720 was received from this debtor, so his outstanding balance is 0. On day 26, invoice number B4 from the debtors journal number 6. The total amount 24,840, and that is the balance. Here Haasbroek, we start with the opening balance, 1st of June 2024, account rendered 23,416. Remember, it must be in date order, so the first transaction was on day 8. Duplicate receipt, so we write receipt number 24. Cash receipts journal, 7,400 on the credit side. The new balance, 16,016. On day 22, sold goods from the debtors journal. It means that goods were sold on credit. Source document, invoice number B3 from the debtors journal. The amount 20,727. My new balance, take 16,060 plus equals. Then the last transaction on day 30, source document, bank statement, amount paid by this debtor, 29,429. So the new balance is 7,358. At Olifant had an opening balance on June the 1st, account rendered 18,100. On day 11, a payment was received, the source document, bank statement from the cash receipts journal, and the amount 10,400. On day 16, sold goods on credit. Invoice number B2 was issued and the amount 2,520. My new balance would be 7,700 plus 2,520. On day 29, invoice number B6 from the debtors journal, 6,429. New balance 16,649. And now you need to be very careful. Take note the debtors list, there was no J now. But if you have a look in the debtors journal on day 29, this debtor purchased from us for the first time. So we don't have account rendered. So now we're going to write the purchase, which was on the day 29. Invoice B7 was issued from the debtors journal 1,417. So just because it's not in the debtors list in the opening balances doesn't mean that we're not going to open a debtors ledger for them. Now, once we've done with the debtors ledger, we complete the debtors list by simply taking all the balances and writing it in your debtors list. So now we've got 5 debtors, whereas in the beginning of the month, we had only 4. Completing the general ledger of Buffalo Kitchenware. We're first going to look at trading stock. We start with the opening balances. So trading stock is regarded as a current asset, which means that the opening balance on the first day of the month will appear on the debit side. Now we need to post the next step from the journals. From the cash receipts journal, cost of sales means the cost of goods that we have sold. And when we talk about goods, we're talking about trading stock. And that's why you would always find from the cash receipts journal, cost of sales is debited and trading stock will be credited. Because it's a money column, it's on the last day of the month. From the cash payment journal, it means that trading stock was purchased. And if we buy trading stock, our assets will increase. From the cash payment journal, bank will always be credited and the rest will be debited. Please do not confuse this. From the cash payment journal, it's bank. From the cash receipts journal, it's cost of sales. Only when we're selling goods, then we use cost of sales. From the debtors journal, it means that goods were sold on credit. Cost of sales is going to be debited, account credited, the trading stock account. And this is because our trading stock is going to decrease because we sold goods on credit. Once we've posted from the journals, we can now balance this account to see how much stock do we have available at the end of this month, the beginning of the next month. So in order for us to do this, we need to take the debit side and add it up. The debit side must be equal to the credit side, and the difference is my balance carried down, which means my opening balance on the 1st of July 2024. Debtors control. Debtors control is regarded as a current asset. The opening balance, the balance brought down, will appear on the debit side on the first day of the month. Now we need to post from the journals. From the cash receipts journal, it means that the business received money. Why? Because of debtors who made a payment. And that's why if we look from the cash receipts journal, our assets will decrease. Debtors control will decrease. From the debtors journal, it means that goods were sold on credit. That means that sales is going to be credited because we've received an income from that. Debtors control is going to be debited. So I'm going to repeat this again. From the cash receipts journal, debtors control is credited. Why? Our current assets will decrease because they made a payment. From the debtors journal, our debtors control will increase. Why? Because we sold on credit, they owe us more money. When we are done, we can calculate our new balance. Take the debit side minus the credit side and then subtract the 119,149. This will now be my new balance, which is the the balance brought down on the 1st of July 2024. Bank. Now, bank is familiar to all of you by now because you've been doing it since grade 8. But now I've asked it a little bit more challenging. Why? The bank has a credit balance. Bank can have a debit or a credit balance. A credit balance means that it's a bank overdraft. We owe the bank money, and that's why it's classified as a current liability. The balance brought down will appear now on the credit side. Please do not confuse this. Just because it's regarded as a liability, when we're posting from the cash receipts journal, bank will always be debited. The rest will be credited except for cost of sales. When we're posting from the cash payment journal, bank will always be credited. So that is not going to change just because I now have an unfavorable bank balance. What this means now is if the business receives money, our current liabilities will decrease. If the business makes a payment, our current liabilities will increase. Now you need to also be careful when balancing this account. I can go from a credit balance to a debit balance, or I can stay having a bank overdraft. So you need to check. And when I mean check, see if the debit side is more than the credit side. Because if the debit side is more, it means now that I went from having no money in my bank account, from owing the bank money, to now having money in my bank account. And if you take the credit side minus, it equals your balance carried down, means July the 1st balance brought down. Nominal account section, sales. Sales is regarded as an income, so the total brought forward will appear on the credit side on the first day of the month. Posting from the cash receipts journal, it means that sales, my income, is going to increase on the credit side. My details, bank. From the debtors journal, it means that my income is going to increase on the credit side, but now your details, the contra account, will be debtors control. After you've posted from the cash receipts journal and the debtors journal, we can total the credit side. There's nothing on the debit side, so we're only going to have on the credit side the new total for sales, which is 407,211. Cost of sales. Cost of sales is regarded as an expense, which affects the owner's equity. Don't confuse the owner's equity minus debit plus credit. Cost of sales is an expense which will always increase on the debit side, and it will always decrease on the credit side. So if I now need to write down the total brought forward on the first day of the month, it's where the plus is. It will be on the debit side. Posting from the journals, from the cash receipts journals, my expense is going to increase. Where does it increase? On the debit side. Very important, what is the contra account? Trading stock. Remember earlier I did the trading stock account and I said to you guys, from the cash receipts journal, cost of sales is debited and trading stock is credited. And that's why the details is trading stock. That's what we say is the contra account. From the debtors journal, my expense will increase on the debit side. My contra account, trading stock. And take note, all of these got a money column, so this happens on the last day of the month. When we are done posting from the journals, there's nothing on the credit side, so we can draw a line and we can total it by adding all of it. When completing now the accounting equation, We're going to look at transaction number 2. Received an EFT for 20,000 from a debtor, M. Brits, to settle part of his outstanding balance on the 1st of June 2024. Issued receipt 23. So now we're taking the same transactions that we've done in the journals and we're just putting them on a different platform, on a different format, and by completing the accounting equation. So we start with the bank has a credit balance, and this is very important to take note of. Credit means it's an unfavorable bank balance, which is a current liability. And this will have an impact when completing the accounting equation. On day 2, if the business receives money, bank is always debited, account credited, debtors control, and then debtors control is regarded as an asset, which means our current assets will decrease. Bank is an unfavorable bank balance, which means when the business receives money, our liabilities, our current liabilities will decrease. On the same day, cash sales of merchandise as per cash invoice 1 to 10, 21,915. Bank will always be debited when the business receives money, account credited, sales. This is to show the selling price, 21,915. Because my income increases, it will have a positive effect on your owner's equity. Now, bank is regarded as a current liability. So what will happen with our current liabilities? It will decrease 21,915. To show the cost of sales is debited, trading stock is credited, assets minus owner's equity minus. Because our expense increase, it will have a negative effect on the owner's equity. Day 4, bought merchandise from AX wholesalers, 39,120 and paid by EFT. When a payment is made, bank is always credited, the rest is debited. Therefore, trading stock will be debited. Trading stock is regarded as a current asset, which will increase our assets. Nothing will happen with owner's equity. Because we made a payment, our current liabilities will increase 39,120. Thank you very much. I want to leave you with this quote. Limitations live only in our minds. Have a wonderful day.